Well, for more on this, we're joined by Josh Mahony in London. He's a Scope Markets Chief Market Analyst. Good to have you with us again, Josh. Well, despite the escalation in the Middle East, global equities are holding steady. What's driving this resilience in markets that are clearly under geopolitical pressure?
Well, it depends where you're looking, quite frankly, because European markets have been rolling over. If you look at the relationship between oil, the US dollar, gold, and equities, that has held very closely correlated when it comes to, say, European markets that don't have a particularly strong exposure to tech stocks. But it's the US markets that have been holding up very well, and the likes of the Kospi that have been doing the same kind of thing because of the outperformance of big tech. So certainly we are still seeing some jitters. And if you look at the US market and you strip out the tech stocks and the energy stocks, you probably see something very similar. But fortunately for the US, they have this huge weighting towards these tech companies that have been propping things up for the time being.
I mentioned that oil's pushing above $109 a barrel as fears grow over the Strait of Hormuz. How real is the risk of a sustained supply shock compared with a more temporary geopolitical spike?
Quite honestly, I think this is the game plan from Iran right now, because they could just outright reject everything and they go back to war. Or else they can essentially long out these negotiations and make it so that the pain is put in the direction of Donald Trump through higher energy prices, lower equity prices. And so all they really need to do is just kind of play the long game here, allude to the idea that they might want some sort of an agreement, but never actually strike an agreement. And that ultimately just exacerbates the problem. We ultimately see oil prices edge higher, which is what we're seeing at the moment. So you're going to see some volatility whenever you hear news that might make you think there's a deal on the line. But as things stand, I don't necessarily think that's going to happen. I think it's likely we're going to continue to edge higher. And this appears to be all part of the plan from Iran to be able to get concessions in those negotiations when this does ultimately come to a head.
Josh, we're seeing that split at the Bank of Japan and a stronger yen on intervention concerns. Is this the start of a more meaningful shift in BOJ policy, do you think, or simply market positioning?
Yeah, this is a really interesting one because this is the first of 5 major central banks this week. Now, by and large, of course, we have come into this period where the BOJ had been expected to hike rates at some point anyway. But then you have the whole demand shock and the shock to the economic outlook that might mean that some members might think that higher rates could be damaging to the economy right now. Remember, they've just downgraded their growth forecast alongside upgraded their inflation forecasts. But this does point towards the potential direction of travel as being towards the upside soon enough, but hesitancy because no one right now knows how long the crisis in the Middle East is going to last. So really it is a guess right now as to whether they should be hiking rates or not. And so that's why you're seeing indecision right now. But certainly if you look at the price of gold, after this announcement, we saw a sharp move lower in terms of gold. And therefore, markets are perceiving this as relatively hawkish in nature and indicative of a potential move higher for interest rates for different central banks around the world before long.
OK, Josh Mahony, great to get your thoughts as always. Thank you.